Good morning. I'm here with Gary Bradfield of Phoenix Bonds.
Morning, Hannah. I'm here with Hannah van Deventer, Phoenix Bonds.
So this is the third episode of our podcast, and it's good to be back.
Absolutely.
Today we're going to talk about self-employed bond applications, why it's more difficult, and what you can do to improve your chances of approval. So I think the very first question I get with purchasers is, am I considered as self-employed? So what are the criteria for a self-employed applicant?
So self-employed, I don't think there's any application, Hannah, that has more grey area in it in terms of a home loan application than what self-employed does, simply because it has so many variables, and also the approach by different institutions is so different. But in its simplest form, once again, I would describe self-employed as a client who derives their monthly income from a business done on their own account and where there is no formal written employment contract between themselves and anybody else. They're essentially in business on their own account.
Okay.
In its simplest form.
And we know it also comes down to ownership. So certain banks say percent shareholding, I think, between 9 and 20%, depending on the bank, could mean that you're deemed self-employed. So if you have 8% shareholding, you're not. If you have 9%, you are.
Yes, and exactly the variables I was referring to. And I think that the bank looks at that in terms of, the simple equation. Is the income that is being presented, that will be used to both qualify and service this home loan, is that income a result of an employment contract? And the generation of such income is not dependent on the actual applicant. So in other words, I may be an accountant for a large firm, and to incentivize me, they give me 5% shareholding. So for all intents and purposes, the salary that I actually receive is not of my own doing. I'm employed. I received a salary in return for work that I do. But to incentivize me, because the function that I perform in the company is so vitally important, they give me a 5% share, so I would share in the profits of the company, which is an incentive to me working on the money side of things to make sure that this company performs very well financially. But I can't be seen as self-employed. However, if I owned the company, if I was a director in that company with a 55% share, then certainly the income that I derive is expressly from the activities that company undertakes under my direction. And therefore I'm seen as self-employed.
Okay, so what about the case, and we see this a lot, where it's husband and wife, one of them owns the company and the other one works for the company. The spouse that works for the company, are they also deemed self-employed?
So again, I think we must distinguish sometimes between criteria that a bank has, and we know that criteria is in place in order to guide a financial institution in mitigating risk. They're in the business of risk. Whenever you lend money to somebody, there's a risk that they won't repay you. So banks have accepted that there's a risk to what they do. The policy that they have, which governs the lending of the money, is formulated to mitigate that risk. But we must distinguish between that and a business case. So where, for example, you have a spouse that owns the company and pays his husband, his wife, or his wife pays, the wife pays the husband a salary, the banks need to look both, not just in terms of criteria, but also in terms of the business case, the merits that presents at the end of the day, because it could very well be the case that it's almost indistinguishable to say that we separate spouses, because technically one is not part of the founding of the company and the other is, whilst they're both very much responsible for the running of that company.
So they will be assessed in their own right.
Correct.
Where they're married, ANC of course. If they're married in community of property, then it's a different story. They are both self-employed.
Correct.
Yeah. Okay. So what do the banks usually consider when they're assessing like a self-employed application? We know the documents that are required are quite hectic. We need business bank statements, we need personal bank statements, we need 2 years of certified financials, what are the banks looking at in that documentation?
Okay, so I think the easiest way is to look at what they look at for a salaried applicant. A salaried applicant presents with a salary advice that you can confirm with the employer. They cross-reference the salary advice to a bank statement where you will see the net amount reflecting, which corresponds to the salary advice, and Bob's your uncle. It's easy, it's tidy, it's very non-messy. Self-employed, by the nature of the way that self-employed operates, means that they don't necessarily pay themselves a salary at the end of the month like a salaried person would receive. They could make drawings throughout the month. They could allow their business, for example, to pay various expenses that are personal in nature out of the business account. So there are all sorts of variations. So the bank, when presented with self-employed, the credit analyst needs to satisfy himself of three things. And really they call it triangulating income. So if you can imagine a point of a triangle, there are three different points. And so what instead of a salary advice, there will be a letter of declaration. A declaration of earnings from the accountant that manages the finances for that company. And it might say that Hannah earns 50,000 Rand per month. So the credit analyst takes that, and now he needs to go and evidence the 50,000 Rand that has been declared. The first thing he needs to do is go to the annual financial statements. In the income and expenditure statement, there should be an item there which says director's remuneration, and it will be 12 times 50, so it'll be 600,000 Rand. There should be an item in there because, as we know, salary is an expense against the business. Once they find that there, they go to the bank statement, both personal and business, to see, is it indeed the case that this 50,000 is being transferred from business to personal? And that's where a self-employed application probably has the most trip-ups and the most challenges, because typically that is not always the case.
Right, and that's the first thing we look for.
Absolutely.
I know our purchasers and agents sometimes get frustrated that we're doing so much work up front with self-employeds, but we know exactly what the banks are looking for, and we need to make, if it's not there, the application doesn't go through.
Absolutely.
So it's that document alignment that you're talking about, that verifying the income and that triangulation of the documents. So
Absolutely.
That's the first thing our originators look at when they assess the application.
And I think in our next episode on self-employed, because self-employed is just so vast, I think it really is important to spend some time just sharing some valuable information for self-employed clients out there in terms of readiness, preparing yourself for your purchase. What is it that you need to do? What would banks look at, etc. So I think our next episode will definitely, for self-employed viewers out there, please do join, and I think we'll find that a really, really valuable session as well.
Yeah, we can go through the loopholes.
All the loopholes. So expect it to be double as long as this one, because there are many.
Okay, thanks, Gary.
Great, thank you very much.
Cheers. Bye.